everyone, my name is Cherry Chen, a chartered professional accountant located in Oakville, Ontario, Canada, and I'm on a mission to become the Google map for hardworking Canadians seeking financial freedom. Today, I have a very special guest here with me. The reason why it is so special is because this guest basically put my two worlds into one and blend it all into one. And not only does he blend everything together, nonprofit and real estate together, he also has a very special last name. His name is Mike Bulthuis. Welcome, Mike.
Thank you. It's great to be here.
Yeah, Mike is actually the executive director of Ottawa Land Trust. Can you tell us a little bit about what Ottawa Land Trust does?
Absolutely. So the Ottawa Community Land Trust, or OCLT, is a relatively new organization. We were founded in 2021. And I think we're on a mission to try to both preserve and expand affordable housing in the National Capital Region, so Eastern Ontario. Not just any affordable housing, but affordable housing that will remain affordable in perpetuity. So community land trusts are organizations that we see across North America that are really, organizations founded by community members and trusted by community to hold land, but for community benefit that maximizes community benefit.
Oh, cool. So what do you guys own right now?
So right now we own two parcels, each with an apartment building on them. So we bought our first 6-unit apartment building in the fall of 2023, and then last summer bought our second building, a 10-unit apartment building, both in the Ottawa area. And yeah, right now are scouting out a number of other potential property acquisitions. Ultimately, I think in both of those cases, and in some that we're looking at right now, we're looking at properties that are in the private market, but where they might be listed for sale or the seller is interested in selling, and rather than losing the affordable housing that is there today, that could happen if a new owner buys and redevelops, or we see some challenges sometimes. Our interest is transferring those properties from the speculative market into community ownership so that we can preserve them as affordable housing forever.
Awesome. So, I'm in this real estate world and I talk to clients all the time, and they were telling me it's hard to get financing. Like, it's hard to get any financing in a corporation. It's hard not to have a guarantor. It's hard not to get financing if your corporation is held by a trust. Like, there are all sorts of financing challenges. You're operating a great organization with a mission, but how do you actually navigate that challenge? Because I don't think the bank would just easily, unless you're super uber rich and you personally guarantee everything. How do you actually come up with the financing to do all these?
Yeah, it's a great question. And I would say that we continue to learn as we go. I think when we put an offer on our first property, that was the 6-unit apartment building in 2023, we looked at what other community land trusts across Canada were doing. And there was one in particular, the Parkdale Neighborhood Land Trust in downtown Toronto, that we knew had acquired a few buildings. And we looked at their kind of financing model and thought, well, we're going to try to model that here in Ottawa. And so, in short, we identified in that property, and probably in many others, 4 different components of our capital stack. So how do we make that 6-unit pencil out? We knew that we could apply for a mortgage, but given that the rents were quite low, which was mission aligned, we knew that that mortgage would be quite small. We did receive a municipal grant. And so we don't really have an acquisition program in the city of Ottawa. The city doesn't typically give out capital grants to help organizations purchase buildings. It's more focused on development of new affordable housing. But we had a local councillor who had some what we called Section 37 funds. So these are funds that are available to a councillor arising from previous developments where the development was perhaps larger than the property zoned for. And so they can give a community benefit allocation. And the councillor has some sway in where those funds are allocated. And in this case, the councillor had some funds that he could contribute to the purchase. So we had a non-repayable contribution, which was really helpful, of course. We did receive a small philanthropic contribution. I shouldn't say too small. I mean, it was $250,000, so that helped in the overall picture. But even after those 3 sources, we knew that we were about $450,000 short. And so made a plan to, within the following year, go to the community and try to raise community investment. And so that became a 4th and really critical pillar of our kind of capital stack. And we did that in 2024, and I can talk more about that. but that helped us kind of fill out that picture. So we sort of had a two-stage process where we assembled what we could for closing. We worked with a lender, Van City Community Investment Bank, VCIB, based in Toronto, a very impact-driven financial institution. And so they offered us a bridge, a line of credit for 12 months that allowed us time to both receive the municipal grant, because public dollars don't come quickly when they do come.
Yeah.
There's a lot of negotiations and agreements and so on. And we hadn't raised that community investment yet. So we had a 12-month line of credit. And then over the 12 months, we raised the community investment, we paid off the line of credit, and are translating that now into, or transferring it into a more typical conventional mortgage.
Okay, so during this time, must be a lot of work because you have to raise the community, raise funds from the community. Tell us a little bit about how you raise funds from the community.
Yeah.
And the terms, because it has to be cheaper than the bank, right? Hopefully.
So it is a little bit cheaper. It also just offers us incredible flexibility. So we worked with an organization called Tapestry Community Capital, which is based in Toronto. And Tapestry is there to provide technical support in helping groups like us structure a community bond raise. So we went out in May of 2024 with 4 different series in our community bond offer. And so our series ranged from anywhere between 3 and 7 years. And we offered returns of between 3.5% and 4.5%. So community bond is much like a GIC. It's a term-defined, predictable rate of return. And so we had a goal of raising 1.7 million. I mentioned earlier that we needed about almost $500,000 to sort of close out our financing for that first purchase. But we thought if we're going through all of this work and believing that the community wanted to be a part of this, we thought, well, let's try to raise enough that we can do this 2 more times at least. And so we set a goal of raising 1.7 million. And within a few months, we had raised well over $1 million, and that allowed us to put an offer on our second property. And then in the fall, we met our goal within a few months, and so we expanded our goal to 3 million, and then met that by December. So, yeah, it's word of mouth. I often say, and I think it's so true, that the affordable housing crisis is known by almost everyone, right? It's a media story on a daily basis, and we see it in homelessness, but we also see it in kids coming out of college or university without any ability to find a place that is affordable. It's such a wide-ranging challenge. And so I think when we launched the community bond, we presented to the community a way for a lot of folks, not everyone can invest even $1,000. Our term started at $1,000 minimum investment. But we offered a pathway for a lot of folks to be part of a solution. And at the end of the day, we ended up pooling the investment of 140 different individuals and organizations to raise this 3 million. And so, I think these were folks, again, investing as little as $1,000, and then certainly a number of 6-figure investments that allowed us to pool those funds and make that possible. So I think it's just a way of being part of a solution that was so attractive and exciting for a lot of folks.
Wow. So tell me a little bit about the investor side, because you have to raise funds, and you mentioned it earlier, it's all word of mouth. But the reality is, to raise that much money, it's got to be, you got to have to do something, marketing, storytelling, and like sharing your stories. And so how did you start?
Yeah, it's a great question. I mean, again, I think that the challenge, the problem space that we are operating in is quite well known. And we hear stories in the media on a daily basis. Community land trusts have also been doing this work for quite some time. When we were founded, when the Ottawa Community Land Trust was founded in 2021, we were founded with the sense of, what is the role that we can play that is not being played by others? And I think there are a lot of affordable housing operators in the nonprofit and cooperative space that would love to grow, but are challenged by certain regulations around the government financing, or have buildings that are several decades old that need a lot of capital work and have very limited capital to grow in that way. And so I think we were founded with a very specific intention to play a unique role, and that is find creative financing pathways to help the sector both sustain itself and grow. And I think that was what positioned us well. So we were presenting a story of innovation. We were presenting a story of, what can we add to support the sector, to support our community? And I think people responded to that. I think that when we were in the process of, we had put an offer, we had our first APS on the first property, and we had launched the community bond raise. Then we began to generate some media interest. I think people were quite curious about what we were doing and how is it that this community organization can raise millions of dollars to buy a building. And so I think some of that media coverage then presented some of these stories of, individuals being rent-evicted, individuals being displaced when their buildings were sold. And I remember CBC in particular interviewed one of the tenants of the building that we had bought. And that individual, she was very clear that the concern was when the building was for sale, that would be the end of her time in that building, that she would have to move. And so I think that story, was broadcast on CBC, and I think that was very compelling. And since then, we've gathered a couple of other stories, also from other land trusts. So I think that sharing those stories of individual lives that are not impacted by displacement, or just the threat of losing that affordable place, I think that resonates with a lot of folks. And so it's been really powerful to see some of those.
Yeah, that also is very impressive what you guys are doing. Now, can I ask how many units are you so you got the second building already and you got the first building which has 6 units.
Yeah.
What's the long-term plan? Are you buying up all the community, are you buying up everything in Ottawa now?
Well, I mean, so on one hand, we would love to, right?
Yeah.
We would love to be in a position where we could preserve affordable housing. We often talk about naturally occurring affordable housing. So, rental properties that are privately held, where over several decades, because of things like rent control and long-term tenancies, we see a lot of the more affordable housing. We would love to preserve those rent levels for households that need that kind of rent level. Of course, when we, in the buildings that we bought and in the ones that we're actively looking at right now, we take that due diligence process very seriously. And we have certainly looked at a number of buildings where we had to walk away. Because, the BCA comes back and the work is just the building condition assessment comes back and the work is too extensive, or we simply don't have enough capital. At the end of the day, even community investment still needs to be repaid. And if the rents are so low, without any kind of philanthropic or government non-repayable grants or contributions, it's really difficult to make the numbers work. So,
100%.
We have to do that due diligence. We have to make sure that things pencil out. Our vision is to operate sustainably without government funding. And we know that real estate, will increase in value over time. And our model is premised upon the ability to refinance our properties over time so that we can draw whatever equity out that we can in order to grow and transfer more of those properties that you're mentioning. So I think that we are very much in a growth mindset. I think that community land trusts in general have that growth mindset where we can, establish a balance sheet, establish a portfolio that gives us more flexibility within the market to be able to respond to opportunities. I think more and more, even now, we are being approached by owners who haven't listed their properties, but would be interested in selling. And of course, now we are one of other potential buyers. And so I think those are really fantastic connections, and we love to continue to make those. So definitely a growth vision. And maybe one other element that I'll add is, I think what we're trying to do is act on behalf of the community at large. And so we know that there are dozens of amazing organizations in Ottawa that support tenants, often from priority communities, maybe supporting young people or supporting refugees or supporting families in crisis. And those organizations have developed programs and supports and services that are excellent. They don't necessarily have the appetite to become asset managers over the long term. And so I think that we see in our vision, can we acquire properties and enter into long-term leases with the operators of those properties so that we establish a larger portfolio of community-owned housing, but benefit from scale that many smaller organizations can't. And so I think in that way too, though we might want to grow, it's not that we want to operate hundreds and hundreds of units. We would love to own hundreds and hundreds of units because I think that gives us flexibility. But we are more than happy to work with operators, other nonprofits, other co-ops to kind of run those buildings and meet the needs that they're so good at meeting.
That's awesome. Well, we do have a crisis. We do have this unavailable, and is that I don't even know if this is a term, the unavailability of the affordable housing. And I always share this story whenever I talk to people. I'm sure I mentioned this to you before. I grew up in affordable government subsidized housing, not they don't call it affordable housing. I'm sure it's very affordable.
Okay.
At the time, I think we pay, I remember 750 Hong Kong dollars a month, which is equivalent to maybe 120, 530 Canadian dollars per month back then. Like now we're talking about 20, 30 years ago when I was still a little kid. And that's the first place that we've moved into from like temporary housing to, it's a small shoebox. Let's just put it that way. It has 2 bedrooms. It's like 500 square feet in an apartment building.
Okay.
The whole building, 35 story. Each story has, I would say, 72 units.
Wow, so it's
each
a large
floor.
building.
Yes, it's all government built, right?
Okay.
I see it as a solution one day, and I don't know if I trust the current level of government to be able to execute something in this scale, but in Asia, this is a common solution to a lot of the homelessness problem. And it would be great to see something like that. Maybe not into that scale, but rather like also supporting nonprofit that has the ability to execute and do the due diligence. Because a lot of saying in the nonprofit sector that I work in is that, hey, nonprofit is proven to be a lot more efficient than government out there doing the work.
Well, we're certainly trained to maximize every dollar, right? And stretch them as far as we can. And I think even to, your story reminded me that though we might, the buildings that we bought so far and those that we're looking at are often several decades old. And I think, we often get asked, well, is it worth the money to preserve these older buildings when we can build more efficiently today, and maybe our energy output can be better with newer buildings. And I think we're committed to greening our buildings as much as we can. But I think too, like we're not shy from potential redevelopment. I think the point again of the Community Land Trust is to recognize that once that land is under community ownership, if we can find ways to maximize the output of that parcel of land to serve more of the community, we're interested in doing that. And so, perhaps there are ways of intensifying the properties that we have or that we might acquire over time. And because I think to your point, there might be ways of including more affordable housing on certain parcels of land. That could be a very effective and efficient way to go.
Awesome. Well, thank you so much for coming on to our show today. Like for people who are interested in potentially becoming one of the what do you call them? Investor. How do they get in touch with you?
Absolutely. So oclt.ca is our website. Housing Forever bonds are the title that we gave to the community bonds that we sold in 2024. I mentioned that we achieved our goal of 3 million. The community raised that in 2024, but we're working very hard right now to re-offer this fall. So hopefully come September, October, we will open sales again. We have a much more ambitious target this time. We know that the community has said, keep going. We have a wait list as of today of over 200 potential investors that have said, let us know as soon as they're available again. So we have on our website a form to sign up to become a part of that wait list. We're looking to raise 10 million this fall, and we're partnering with another organization that wishes to raise 15 million. And so, and with that, I want to speak to, I think Housing Forever bonds were seen by the community as a way to invest in community housing in Ottawa. It wasn't so much about the Land Trust or another organization, but how do we have an impact on our community and supporting our neighbors? And so this other organization, CCOC, would like to build more affordable housing. We would like to preserve more affordable housing. Together, we want to go to the community and say, there are ways that we can all do this together. And once we sort of have that conversation, then folks might want to invest in the Land Trust or perhaps invest in this other organization. But lots more information will be coming on that on our website over the coming months. But again, Housing Forever bonds are going to be sold again this fall.
Awesome. Thank you so much, Mike, for doing all this. And it's a lot of hard work, I know. Like putting together the capital stack, and on its own sounds super intense. So kudos to you for taking the initiative and thinking outside of the box to do something for the community for the benefit of everyone. So thank you.
Oh, well, thanks for the chance to talk about it. It's really exciting.
Thank you.